Every country on Earth is in debt. The United States owes over $33 trillion. Japan owes more than its entire economy produces in a year. Germany is in debt. France is in debt. Even Saudi Arabia, sitting on one of the largest oil reserves in history, carries hundreds of billions in sovereign debt. Every government, every empire, every so-called economic powerhouse, all of them in debt. So here's the question nobody wants to answer. If every country owes money, who exactly is on the other side of that ledger? Who is owed? Because debt doesn't exist in a vacuum. For every borrower, there must be a lender. For every IOU, there must be someone holding it. So where are they? This is the financial historian, where money, power, and history collide, and nothing is ever as simple as it looks. To understand who holds the world's debt today, you have to understand how government borrowing was born. And it wasn't born in a boardroom, it was born in a war. The year is 1694. England is locked in an expensive military struggle against France. The treasury is empty. The king needs money fast, not next year. Now. So the crown turned to a group of wealthy merchants and goldsmiths with a deal: lend us £1.2 million. In return, we will pay you interest, guaranteed, backed by future tax revenues of the English people. The merchants agreed, and to manage this arrangement, they created an institution to hold the debt, collect the interest, and issue new money against it. They called it the Bank of England. It was revolutionary. For the first time in history, a government had turned its own debt into a permanent, tradable financial instrument. The loan didn't need to be repaid. It just needed to keep paying interest. And as long as it did, the lenders held something more valuable than gold. They held a guaranteed claim on the future earnings of an entire nation. That single invention, the government bond, became the seed of the entire modern financial system. France copied it. The Netherlands refined it. The newly independent United States used it to fund its revolution, and within 2 centuries, every major government on Earth was issuing bonds, rolling over debt, and paying interest to a growing class of institutions whose entire purpose was to hold those promises. The battlefield had become the balance sheet. So let's ask the question directly: who holds the world's debt today? The answer is not a single villain. It's not one country, one bank, or one shadowy family in a mahogany office. It's a system, and once you see it clearly, it's far more unsettling than any conspiracy. Start with the United States. Of its $33 trillion in debt, roughly half is held publicly, meaning owed to actual investors rather than other branches of government. Of that public portion, about 2/3 is held domestically: American pension funds, mutual funds, insurance companies, and the Federal Reserve itself, the central bank that literally creates dollars, holds trillions in U.S. government bonds. The remaining third sits in foreign hands. Japan is the largest foreign holder, with roughly $1 trillion. China follows with around $800 billion, then the UK, Belgium, Luxembourg. So when people say America owes its debt to China, that's technically true, but it's only about 2% of the total. The far bigger creditor is America itself, its own institutions, its own central bank, its own retirement accounts. The debt America owes is, in large part, a debt America owes to Americans. But here's where it gets strange, because Japan, which holds over $1 trillion in U.S. debt, is itself one of the most indebted nations on Earth, with debt exceeding 260% of its own GDP. So Japan lends to America while simultaneously borrowing at home to fund its own government. Europe lends to developing nations through the IMF and World Bank. Those developing nations park their foreign currency reserves in European and American bonds, lending back to the very countries that just lent to them. China holds American debt while its own banks carry trillions in domestic loans, backing a real estate sector that has been quietly collapsing for years. Everyone owes, everyone lends. The chain has no beginning and no end. It is, as one economist described it, a poker table where every player has borrowed their chips from the player sitting next to them, and the only rule keeping the game alive is that nobody stands up. This isn't a new arrangement, it's an ancient one. In 15th century Florence, the Medici family did not merely lend money. They held the debt of kings, the Pope, the rulers of England and France. Their bank, the most powerful financial institution in the known world, was built entirely on the principle that sovereign debt was the safest, most profitable asset in existence. As long as kings needed armies, and armies cost money, the Medicis would be needed. They didn't conquer territory. They didn't need to. They held the I owe us of those who did. And when Edward III of England defaulted on his loans to the Florentine banks of the Bardi and Peruzzi, an earlier generation of Medici rivals, those banks collapsed overnight, taking thousands of depositors with them. The lesson wasn't that lending to governments was dangerous. The lesson was that concentration was the real risk. Hold the debt of one king, you're exposed. Hold the debt of 20 nations, and you become too important to fail. That insight, diversify sovereign exposure until you become systemically essential, is the same logic that drives modern bond markets, central banks, and sovereign wealth funds today. The Medicis understood something it took the rest of the world 5 centuries to formalize. The creditor who holds enough debt doesn't just lend to power. The creditor becomes power. And so, who is the creditor when every country is in debt? Here is the answer that no politician will give you. The creditor is the market itself. Not a person, not a country, not a bank with a name on a building. The creditor is the collective judgment of thousands of institutions, hedge funds, pension funds, insurance companies, sovereign wealth funds, and central banks, managing tens of trillions of dollars in assets, making decisions every second of every trading day about which governments deserve to borrow cheaply and which ones will pay a premium for survival. These institutions don't vote. They don't hold press conferences. They don't answer to elected governments. But they decide more than any parliament or president what a nation's future will look like. And when they trust a government, interest rates stay low. Borrowing is cheap, spending continues, the machine keeps running. When they lose confidence, when they smell instability, inflation, or the faint scent of default, they sell. Yields spike. Borrowing costs explode. Governments scramble, currencies collapse. We've seen this movie before. In 2010, Greece's debt was revealed to be far worse than reported. The markets moved. Yields on Greek bonds shot from 5% to over 30% within months. The government couldn't borrow, it couldn't pay wages, it couldn't fund hospitals. The IMF and European Central Bank arrived, not as rescuers but as enforcers. Their loans came with conditions: cut pensions, raise taxes, sell public assets. An entire generation of Greeks paid the price for a debt crisis they did not personally create. In 1997, a speculative attack on the Thai baht triggered a chain reaction across Southeast Asia. Indonesia, Malaysia, South Korea, currencies collapsed, economies shrank, governments fell. Ordinary citizens who had never heard of a bond yield woke up to find their savings worth half of what they were the week before. In Lebanon in 2019, the system simply locked the doors. Banks froze accounts. The currency lost over 90% of its value. Lifetimes of savings became worthless in months. In every case, the invisible creditor, the market, had made its judgment, and the judgment was final. Democracy decides who governs. Markets decide who survives. But here is the paradox at the heart of this entire system. The debt is real. The interest payments are real. The suffering when it goes wrong is absolutely real. And yet, the creditor, in the deepest sense, doesn't truly exist outside the system it created. When the U.S. Federal Reserve buys U.S. Treasury bonds, which it has done in the trillions, it is creating new dollars to purchase debt issued by the same government that created the Federal Reserve. The Treasury owes the Fed. The Fed was created by Congress. Congress is funded by the Treasury. It is a closed loop, a mirror facing a mirror, reflecting debt into infinity. The money that flows as interest on government bonds ends up in pension funds. Those pension funds are owned by the same workers who pay the taxes that fund the interest in the first place. You pay taxes. The government pays interest. The interest goes to your pension. Your pension buys more bonds. The government pays more interest. You are simultaneously the debtor and the creditor. System doesn't owe money to a mysterious outsider. It owes it to itself. But, and this is the part that should keep you awake at night, it does not owe it equally. Interest payments don't flow in a circle, they flow upward. From taxpayers to bondholders, from workers to institutions, from the many who pay taxes to the few who own enough assets to collect interest on sovereign debt. Global debt and global inequality rise together, and they rise together for a reason. The system is designed so that those who own debt get paid, and those who merely service it get poorer. So, what does any of this mean for the person watching this right now? It means that every time a government borrows to fund a war, a bailout, a stimulus package, or an election promise, it is writing a check that ordinary people will eventually cash. Not the bond traders, not the hedge funds, not the central bankers. You, through your taxes, through inflation quietly eroding your wages, through public services that get cut when the interest bill gets too large to ignore. The modern financial system has performed one of the greatest illusions in human history. Such it has made debt invisible to the people who ultimately pay for it, while making it extremely visible and profitable to the people who hold it. The question, who is the creditor, sounds abstract. It sounds like economics. It sounds like something for experts. But it is the most personal financial question you can ask, because the answer determines who owns the future and who simply lives in it. The world doesn't owe its debt to China, or to Wall Street, or to any single face you could point to in a lineup. It owes it to a system built over 3 centuries on the simple idea that sovereign promises are the world's safest asset, and that those promises will always be renewed, never truly repaid. As long as confidence holds, the system breathes. The moment it doesn't, we find out very quickly who the creditor really was. And history tells us it was never who you thought. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.